Hello and welcome again. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is Tuesday, the 12th of April of 2022. Markets are moving up higher today as a result of the CPI data. Now, the CPI data came in at a 40-year high at 8.5% year over year, month over month in the month of March. So we all know on our kitchen table, from food to energy, the stuff that we spend our money on, ultimately inflation is everywhere. In fact, in my conversation yesterday with Reuters TV, in an interview, I specifically talked about how the Federal Reserve is way behind the yield curve. If you've been watching interest rates this year, as we all have been, interest rates are moving higher. That's pushing pressure on housing. Housing right now, if you look at year over year costs, even just for housing, whether it's rent or even a 30-year mortgage, it's up over 30% right now. We're in the 5% for mortgages right now for a 30-year fixed. And so right now, the consumer is going to get clobbered. We're already feeling it. And what is that going to do for corporate earnings? Well, we're kicking off earnings seasons tomorrow. So with all higher input costs, higher inflation costs, the consumer is feeling it, both in housing, food, energy, everywhere you go, we're all feeling it. Now that's going to eat into the consumer's balance sheet, personal balance sheet, where we spend money. Now the real test is going to be earnings season. We kick off tomorrow with the big banks. And this earnings season, we're going to want to pay attention to exactly how corporations are navigating the higher input costs. Talk about supply chain constraints, considerations, obviously all the geopolitical concerns, which eats into the consumer's confidence. Small business owners' confidence is down. So a lot of negative is built in. We want to see if corporations can still maintain their top and bottom line growth. And history has shown, even going back to 2020, when we were in the midst of the pandemic, corporations, when the world shut down for at least a quarter, were able to eke out earnings in hot top line and bottom line. So even though the current conditions are challenging and input costs are higher, we actually want to see what the ultimate impact is on the consumer. So corporations are going to give us an inside preview as to the consumer. My guess and our guess here at Blanke Schein Wealth Management is that we have to be cautious. In this market, we're balanced, diversified. Our process will win out, but we have to get through some tough months ahead. And as we do that, we see a better backdrop for the back end of this year. Why do I say that? Well, if you look at history as our guide, as we normally do here at Blanke Schein Wealth Management, a lot of different ways and matrix that we're looking at this. We're going to get through all of the sort of negativity. We're going to have the Federal Reserve by summer hopefully catch up with interest rate hikes next month and the month thereafter. Again, I'm suggesting that interest rates should go higher because the 10-year Treasury is already there. So the Federal Reserve should just move sooner than later and just move them really quickly, because interest rates are technically already there. They just have to move the Fed funds rate to catch up. That being said, in the back end of this year, we will see more visibility. We will have more certainty. And I think we're going to have less volatility. And that will bode well for earnings, for corporations, and again for the markets and our clients ultimately. But unfortunately, we got to get through tough times right now, and we're just keeping some cash on the sidelines, letting markets come to us, and taking advantage of things that are still going to do well. We're seeing in sectors like energy and some commodity opportunities and some of the metals going forward. So stuff will actually, when you have a balanced portfolio and diversified, and you stay on top of your game, you can do well in any type of market. So that's our update for today. Enjoy the Reuters interview. It's a real brief one, and we'll see you again next time. Thanks for watching.